I think it is safe to say I have tested my fair amount of timeframes, and over my journey, obviously I found the timeframe that I find the best result, and that's what I want to reveal to you today. In my opinion, what is the best trading timeframe and what to do with these other timeframes, what timeframe should we use in our trading, and more importantly, why. So that is exactly why I am making this video, to clear up all of this and tell you guys exactly what timeframes I use, and more importantly why, and when do I use different timeframes for what situation, and how to use timeframes. So if that sounds like an interesting video, I definitely advise you to stick around for the full video. And with that being said, let's get straight into the video. Alright, so the first thing here is about timeframes is we obviously have our standard timeframes. Our standard timeframes would be 1 minute, 5 minute, 15 minute, 30 minute, 1 hour, 4 hour, daily, weekly, monthly. Those are your standard timeframes, right? Now, there's some people out there will include the 3 minute, the 12 hour, the 6 hour, all of this stuff. But in terms of traditional trading and what has been done over the years, those are your traditional timeframes. So which time frame should we use for entries and why? But there's something we also need to discuss. Timeframes are also going to be emotional, and they're also going to be strategy based, right? So those two factors are very important. Emotional means, what type of trader are you? You need to identify what suits my lifestyle. So that's the two reasons, strategy and emotional. Now, technical reason of what time frame to use is also going to be very, very important. And that's the next route we're going to go down. So let's get to the charts and let me explain how I use the time frames and why the 15 minute is my favorite time frame and how I use that to my advantage. So let's get onto the chart and discuss that. All right, guys, so we're here at the chart. So like I said, 15 minute going to be my bread and butter time frame, and I'm going to explain exactly why, and I'm going to explain later on in the video how to use lower time frames. But you cannot disregard your higher time frames. Your higher time frames are key. Don't throw them out the window. They are super, super important. And I'm talking about weekly, daily, and 4 hour are very important time frames, because let's use a bit of common sense. If the previous daily closed bullish above a certain zone, it's more likely that the next day is going to continue bullish. Same thing with 4 hours, and that common sense and logic is used in the markets when trading. So make sure to do your top-down analysis. I have plenty of videos, support and resistance video on my channel. Editor will pop up a few. Go check them out. Spend some time, check them out, so you know how to use a higher time frame. So why do we use the 15 minute for entry? Why is my entry based on 15 minutes? So my entry technique and my setups, right? I'll pop up an image of my setup, setup 1, 2, 3. You can see all of them are based off what? Are based off closures, right? So I need candles closing above or below zones, such as something like this, right? This would be an entry option for me as the candle closes above a resistance like this. Let me go and draw a line that you can actually see here. This would be an entry option for me above a resistance to continue bullish, right? Actually a trade I did take. Now, this is an entry confirmation because I have a candle closing above my zone. I don't take impulsive entries. I don't take entries without confirmation because I want price to prove to me. Now, 15-minute time frame is going to be a great time frame for any strategy that you use. And the reason why is because it's not low enough that we have too little confirmation, not high enough that you don't get any trades, because for someone like me waiting for candles to close, if I waited for the 30-minute or 1 hour candle close, I'm missing the trade. So when do we use the 30-minute, 1 hour, and so on? So 30 minutes, another great time frame, but I found I was missing a lot of trades trying to wait for the 30-minute. Now, the best time to use the 30-minute is to use the clock. All you're going to do is use the clock. If there is a 30-minute closure, which is also going to be the 15, which is the case of this scenario. So look at this scenario when I took the trade. This trade was actually had a 30-minute candle closure coming, okay? But I actually entered before that candle closed, right? So that was how the trade looked. Took a position above here. I entered on this, stop loss below the lows, right? Something like this, and targeted wherever, right? My target. Now, I got entered on this 15-minute candle. So for me, entry confirmation was based on the 15-minute. Now, what was the next candle to close? Obviously another 15-minute, but that was also the 30-minute now. So the 30-minute candle closed. Does the 30-minute support my trade? Yes. So whatever time it is, if it's 1:30, 2:30, 2 o'clock, you have to check the other time frames such as the hour. Now, if the 30-minute, the trade did not make sense on the 30-minute, then that does not make sense for my trade to be executed because it's not making sense on a time frame that's closing. But it's very rare case that the trade makes sense on a 15-minute but doesn't make sense on a 30-minute. But that's why you have to do your high time frame analysis. If you skip out on high time frame analysis, you're going to lose the trades and you're going to find inconsistency in your trading. So when can we use the lower time frame, like 5 minute, 1 minute, etc.? These time frames can be extremely useful to use. Now in this scenario, the time I will use the 5 minute is, let's say there was a little resistance here formed, right? I can pop down onto the 5 minute and wait for structure to be formed on 5 minutes as well here. So 5 minutes is a time frame where you have the confirmation from an hourly close, 30-minute close, even a 15-minute close, but you don't really want to run such a big stop loss. But you need that extra confirmation of price closing above maybe its own 5-minute resistance that was created. So that's when I drop down personally to 5 minute and use that. It's for extra confirmation once I have either my 15, 30 or 1 hour close, because those are the bread and butter, 15 being minimum. So I have to have that confirmation first. Now 1 minute, when do I use the 1 minute time frame here? This is where you're going to find your inconsistency in trading. Whoever says I come into trading, trade 1 minute, trade 5 minute consistent without analyzing the higher time frames is lying. So the only time I use 1 minute is to manage my position in profit, because whenever you're in profit, 1 minute will create nice structure, right, which you can use to analyze how your position is running. We can see higher lows, higher lows, higher lows, higher lows, boom, break of structure right here. Right, we can see right at this spot right here, we had a 1 minute break of structure, which could indicate a reversal. What did we do once we broke structure here? We started to fade out the move that was created, right? That move was faded out and it came back. So that's where 1 minute can be very useful to analyze how your trade is playing out. And there's different scenarios where you can really squeeze as much as you want out of the TP, as well as, which I have a method called the 1 minute squeeze method, as well as monitor how your trade is going. But if you're an emotional trader, I would not even recommend opening the 1 minute chart, as you're going to have big difficulties controlling your emotions when you see pullbacks like this that don't break structure, but you feel like you want to close, or you have pullbacks like this and stuff like this, right? You're going to be like, I want to get out. You close early and you have a problem of closing trades early, which is exactly what we don't want. So the last thing is, if I keep changing my time frame, I have to backtest on all those time frames to create data and statistics. I have a full statistic sheet here of, this is my public one that I take on live stream. All the trades I take on live stream, you can see the time frames that I use: 15 minute, 15 minute, 15 minute, 15 minute, right? You can see all the time frames that I use, and this is data that I can trust, because now I can trust the 15 minutes because I can see over a year worth of data, there's a 77% win rate on what I'm using here. And if you keep changing time frame, you won't have those statistics. If you ever drive into a rough period of your trading, guess what? You're not going to find how to get back on track. You're going to be a bit lost and end up in that cycle, and that's not what we want. So understanding time frames is super important, and your markup is super important. I've said this before, but in my exclusive groups, I make people send their markups daily. I review people's markups daily, as it's such an important part of the trading to make sure that people are either not overmarking, undermarking, and making sure that you can trade accurately between those levels, which all come from analyzing the different time frames, right? So hope that was useful. Take care, trade sharp, and hopefully catch you guys very, very soon. Peace.